Apes and apettes, welcome back to the channel. Today is the Fed FOMC Minutes. So this is like the coin toss to the Super Bowl. You're going to see a dramatic reaction one way or the other, whether to the downside or the upside. It looks like it might be skewed to the downside, especially with that emergency meeting that took place on Monday. They might throw a wrench in the FOMC minutes and freak out the markets a little bit. That's what I'm really thinking, and that's what makes sense at this current moment, but it is possible to see an upside candle. So we're going to go over exactly what the markets are going to be looking for, and this is trading algorithms. They're going to scan the FOMC minutes, they're going to scan that report, and then they're going to take a fat candle to the downside or a fat candle to the upside. So make sure you guys' trades are finalized before 2 p.m. if you are making any trades. It's probably best to sit this one out and see what the markets do. But nevertheless, we're going to go over that, what I expect, all of the data that you need to know around AMC, because yet again today, we are seeing a bullish day for AMC. AMC up about 2.2% currently. The SPY is down 0.61%. We have not done anything all day. Since we opened, we've seen a fat candle to the downside, about a 0.23% candle to the downside, and we have stayed in this range all day. So keep that in mind. We're pretty much range bound right now. We're all waiting for the FOMC minutes. Like I said, it's like the coin toss of the day, as well as we do see institutional option flows for AMC that are incredibly bullish for the day. So we're going to dive into all of that and everything else you guys need to know around AMC. If you guys are new to the channel, my name is TCI. We keep you guys updated on what is going on with AMC as well as the broad markets, because that does in fact affect AMC. So if you guys want to be a part of that, hit that like button for me. Don't short the like button. Subscribe to the channel and make sure to comment down below what do you guys think about this information. What do you guys think about the FOMC minutes that are coming out at 2 p.m. Also, if you guys want to get totally free money, mine as well, right? It's not too often people are giving you free money. Check out the links for Webull, Moomoo, and Public down below in the description of this video. I personally use all three, so I can vouch for you. They're safe, and it is some free money at the very least. And if you guys want access to my trades, link down below in the pinned comment. We have been killing it over there. Now, let's dive into the situation. So we did get some data points today, including retail sales that surged 3.8% in January, much more than expected amid inflation rise. So that's a good and a bad, because it shows people are spending money, so that's good for the economy. But on the downside, it does show that we're probably going to get much more inflation before this whole thing is said and done. So it's a bit of a good and a bad. I think the markets kind of took it to the negative side, whereas just 6 months ago it would have been seen as a positive. So good is bad, bad is good. That's kind of the way the markets are rolling for right now. But the only thing that matters today is going to be the FOMC minutes. And I think the Fed could throw a wrench in the market's expectations. They could either say, hey, we're going to wait, raising rates, we're not going to go too aggressively, and that would be a very positive for the markets. But odds are, especially with that emergency meeting, they did change some things up, probably to increase the pace of rate hike increases. Why? Because inflation is crazy. I think you pretty much understand that before I even said anything. But when that report comes out at 2 p.m., you're going to see a big move to the upside or a big move to the downside, possibly a big move up, and then a straight back move to the downside. Last time the FOMC minutes came out, we seen a 1.3% drop after that report came out. So that was a big move, and I do expect something along the same lines today. And it looks like the S&P 500 is just geared up to see some kind of move, taking a little bit of a move to the downside right now. But nevertheless, if that report comes out something we did not expect and it is bearish, I mean, the candle could fall through the floor coming at around 2 p.m. So keep that in mind. My gut feeling, what makes sense with the data we are provided around inflation, it does make sense to see the Fed act a little bit more aggressively to try to control inflation, as they are behind the curve and they finally realize that. So odds are we will see a move to the downside. Probably not a good time to be trading that, just because it could go either way. The markets are a bit wacky at the current moment. Nevertheless, you will see a big move. So that's really it as far as the data is concerned. Today is the big day, like the coin toss in the Super Bowl, right? You're going to see that crowd make that initial reaction, and that's going to be the markets. And then as we get through the game, that's going to be the whole raising rates thing. And then once you get to the end of that game, that's where you're going to see the markets make that final move to the downside or the upside. All of this, of course, happening over time. I think that's a pretty good way and a pretty good analogy to go over exactly what the markets are going to do. This is really the big one, right? It's setting that trajectory of potentially crushing inflation, but crushing the economy at the same time. So hopefully you guys get why that is so important, and that will be coming out in about 2 hours time. So keep that in mind. Now, the biggest thing, people are going to be watching for and algorithms are going to be scanning for is really the balance sheet. What does the Fed say about balance sheet? Because we are basically playing Russian roulette with modern monetary policy. And what that means is we have never done a balance sheet reduction in the way that we are going to try to do this now. The Fed's assets have went from $800 billion to $9 trillion since 2008. So nobody knows what it's going to be like, even decreasing the balance sheet $3 trillion, going from or $2 trillion from $9 trillion to $7 trillion like we were at during even the beginning of the pandemic. Nobody knows how that is going to be. Or if you want to get really dramatic with it, February 2020, we were only at $4 trillion. So we have doubled the balance sheet in the past 2 years. And that's a lot of liabilities. That's a lot of supply that will hit the markets and drive rates through the roof. So nobody knows what is going to happen. And that's why the markets are going to be so sensitive to the balance sheet statements. Everybody knows what to expect when the Fed raises rates. They don't know what to expect when you're talking about decreasing the balance sheet by possibly $4 trillion here in the next couple of years. So keep that in mind. That's going to be a key. And obviously, I will keep you guys updated on what actually does come out during those Fed meetings or Fed minutes later on today, but it is going to get a little bit crazy nonetheless. Now, as far as rate hike expectations, let's go ahead and refresh this. We could see that 53.1% of market participants believe we're going to see a 0.5% rate hike. So in a weird way, if we don't see anything about that on the FOMC Minutes report at 2 p.m., the markets might actually rally if the Fed doesn't go too aggressive, because only 46.9% of market participants believe we will see a 0.25%. So more people than not are expecting a more hawkish Fed than we've already had priced in. If the Fed says lockstep rate hikes or something along those lines, the markets would freak out, and that's a lot of very fast rate hikes. So keep that all in mind. As far as AMC in particular, we could see the short interest of free float is 21.12%. Current shares that are sold short, 108.37 million. Cost to borrow max of about 4%, and the utilization is 100%. Again, we're seeing that cost to borrow max at almost 4%, and the utilization still at 100%. So what that means is people do not want to lend out their stock for 4% when the stock is going up 2 to 10% on a daily basis. So days to cover is also at 2.4%. All of this incredibly bullish. As far as the options are concerned, 69% of the option order flows for the day, the sweeps, the large, and the block trades for institutional investors are bullish. 12 orders totaling 4.84 million. So that is looking really, really good. Really, really good, if I do say so myself. And I do think a lot of that manipulation that we have been used to for AMC is kind of starting to subside and go away, just based off the price action, the option flow sentiment from institutional investors, and this probe that we all know about by now that is targeting the liquidity providers as well as the banks that do a lot of business on Wall Street. So I think the gig for the most part is up as far as that scheme is concerned. So that's my personal take on it. Feel free to disagree with me on that. I think a lot of the manipulation is gone now, and we're seeing a lot of our orders actually going to the lit exchanges. And every time we buy stocks, like in the past, nothing would happen to AMC. I mean, nothing would happen. Now I think that's a little bit different, and if we all just continue to buy like we do on a daily basis, you're going to start seeing the stock going up and actually reflective of those buys that we are putting in. As far as the max pain, it's still sitting at $19 by Friday. And the Stonko Tracker data, you have about 240,000 calls that are out of the money, 65,000 calls that are in the money expiring by this Friday, 26,000 puts that are in the money, out of the money puts at 119,000. 1,000. So that definitely could set us up for a gamma squeeze if we do see a bullish response today from market participants because of the FOMC minutes. I think it's unlikely, but it is possible. Nevertheless, let's dive into a little bit of technicals on AMC. The first level we need to break out above and obviously hold is $20 per share. We're currently sitting at $20.04 per share. If we can hold that, that looks really, really good. As you guys can see right here, kind of drawing an imaginary line. That's kind of where we topped out back here, fell under that, did not approach that or even test that for a while. We tested that right here, and we are also testing it again today. So if we can break out and stay above $20 per share, looking really good. After that, $22.17 per share is the 50-day moving average. And as we do know, we are well above the Bollinger Band, so the 20-day simple moving average at $16.89 per share. So thank you guys for tuning in. Sorry for my daughter. She is going crazy today. She was being a bad kid at the restaurant last night. So I do apologize for that. And she just wants to make her dad mad and cause a lot of trouble. So thank you guys for tuning in. Appreciate you guys, and I will see you in the next one.